We are here to talk about PEOs today. So I'm going to take you through an overview of really what PEOs. There's more to PEOs than what we're going to be discussing today, but really what we're going to be targeting is understanding what I believe is one of the most powerful parts of a PEO, which is their aggregation model. So we're going to go through a presentation, then after I'm happy to answer any questions. Just to let everyone know too, I have a open door policy. Anytime you have questions, if you're using a PEO, if you're considering it, please don't hesitate to reach out. I'm happy to just discuss any type of PEO situation with you or dig deeper into any of the topics we're discussing today. So with that being said, I will move on. So just a little background on myself. I've been the CEO of Power PEO Consulting for 6 years. I started Power PEO Consulting in 2016 after working at ADP for 14 years. At ADP, I had a range of experiences and essentially education around human capital management. So I founded, Power PEO. I was working for ADP's PEO and realized that evaluating a PEO and really determining what PEO is going to be the best strategic partner, really is the grass greener on the other side. It's a pretty sophisticated and complicated process to go through that evaluation. So really when I founded Power PEO, it was designed to be an advocate for the small businesses to help make sure that you are making an informed decision with what PEO partner you're going to be using. I experienced firsthand how PEOs can really help businesses, but not all PEOs are designed the same way. Not all PEOs provide the same level of service and whatnot. So that's where I come in to help. But really, I have deep domain knowledge in PEO, payroll, HR, human capital management, health benefits, the whole range of the life cycle of managing an employee. So just to give you a little background how I fit into the PEO world and Power PEO Consulting fits into the PEO world, we function as brokers. So we listen to what you're looking for and go out and seek a solution that could be a good fit. Sometimes we find solutions that are better than the status quo. Sometimes we don't. And when we don't, it just reinforces that what you have in place today may be the best option for you. So again, this is Power PEO's expertise because PEO is really there's a lot of different compartments of a PEO, which we'll jump into. But I've been doing in this industry for over 20 years. So in terms of, PEOs in your business, there are essentially what I've determined is that there's two primary reasons that companies move to a PEO. Number one is the aggregation model, right? And we're going to go through what the aggregation model means. But really what the aggregation model, it's designed to create significant economies of scale for small businesses. So when you're using a PEO, you are tapping into a large aggregation model of thousands of employees. So you can tap into significant economies of scale. And I think this is the biggest differentiator of what a PEO provides, because there's very few, if any, models that can aggregate a lot of small businesses and provide access to that aggregation model. PEOs also provide, strategic human capital services. Really, PEOs, they have a vested interest in protecting your business because they need to protect their PEO. And I'll get into the reason of why that matters. But really, what we really look for here is the combination of optimizing the aggregation model. And when you pair that with the technology and whatnot available through the PEO, That's how you find the optimal PEO solution. So moving on, now to a lot of you, this may look familiar, and this is designed to look a little chaotic. This is what it looks like when you're not using a PEO. Payroll companies have gotten better at pooling different services together under one umbrella, essentially taking fragmented solutions and putting them together. But payroll companies really, their goal is to get to where PEOs are today in making sure everything is connecting and talking. But right now, in your world, you may have a payroll system, and that payroll system may not talk to your workers' comp. So you have to make estimated payments on your workers' comp, and then you also have to have audits, a whole range of things there. 401k, you may have to have a separate administrator that does not integrate with payroll. So when you're done with payroll, that's great, but now you have to move on to 401k, make sure the money is moved to the 401k provider, and do all of the 5,500 in testing yourself. Same thing with benefits. Most small businesses do not have their health benefits integrated into their payroll system. So there, again, that's a whole nother task. If employees change deductions, add dependents, then that's a manual process that you have to take from benefits and move into payroll. And then, having all of your training, all of your HR, all of that, often that's in a separate database. So really in the status quo model for most businesses, the non-PEO model, you have a lot of different databases that don't talk to each other, and it ends up being a little chaotic and fragmented. So what happens, and when you're in this environment, you have greater exposure to liability. You also have the ability of getting more penalties and making a mistake, because if you forget one area here, it could generate lawsuits or mistakes or penalties. So what happens when you move to a PEO, and I'll explain how this works. So a lot of people may say, how does a PEO, how can they create an aggregation model? So one of the most important parts of a PEO is the co-employment relationship. You'll see right up here. The co-employment relationship, functionally how a PEO works, is that you have your employees and you under your federal ID number. And what happens with a PEO is, let's say you take your company with 7 employees or 50 or 70 employees, and you shift them under the PEO's federal ID number. So technically you have no payrolls, no employees under your federal ID number. You become the worksite employer. You control who's hired, who's terminated, culture. The PEO wants nothing to do with you with how to run your business. But the PEO becomes the employer of record. So when they file their 941 at the end of each quarter, the 941 has all your employees' wages on it. You don't have a 941 tax filing when you're using a PEO. So a lot of the administration responsibility and also liability is now shared with a PEO. I want to be clear that when you move to a PEO, you are not outsourcing all of your liability whatsoever. Moving to a PEO, you still have liability, but the PEO also shares in that liability because the employees are paid under their federal ID number. And in addition to that, the PEOs have, again, a vested interest in protecting you, but it's really the insurances within the PEO that protects you from lawsuits and whatnot. So that's an important thing to remember, is that when you move to a PEO, your employees move to the PEO's federal ID number, and that is the mechanism that creates the aggregation model, right? Technically, these PEOs have thousands of employees, so they can create tremendous economies of scale by aggregating thousands of small businesses together. So what happens when you move to a PEO's federal ID number, you are now, like, if you look at the PEO as a chassis, you put your company on the PEO, and you're now able to use their technology that is all together. It's not piecing together fragmented technology and trying to make it work. It is one system that talks to each other real time. So as an example, if you have an employee that adds a dependent while you're using a PEO and their health insurance, they add a dependent to their health insurance because there was a life change event, that information would change on health benefits. That information would also change on payroll for their deduction with their next payroll. And then automatically the PEO would bill the premium for all these changes. So it all happens real time and automatically. So as you see here, you connect your 401k. Payroll is the cornerstone of the technology, and 401k feeds in out of payroll. Your benefits feed out of that, workers' comp. So when you process your payroll, your workers' comp premiums are paid, your health premiums are paid, your taxes are paid, your 401k is funded. Direct deposit is paid to employees. So it's very efficient to handle all of that. But it really creates, if you think about it, payroll, HR, safety, benefits, these are areas that really shouldn't be fragmented because it all creates one ecosystem, right? We know that workers' comp claims can feed into HR-related lawsuits. We know payroll issues can create deduction issues with benefits. So you need to make sure that your 401k is capped at the right contribution limit, or that creates problems. So having everything talk to each other just creates a more predictable path moving forward and everything working like clockwork. So, so why don't we jump into this aggregation model a little bit more? Because when people move to a PEO, they are often hearing that we can save some money on our health benefits. We can reduce our costs on workers' comp. And often that is the case. So I'm going to just take you through a little snapshot of how the PEO aggregation model works in all of these different areas. So, and again, keep in mind when the PEO are aggregating, some of your smaller regional PEOs have, let's say, 5,000 employees. That's still a pretty big number in terms of their aggregation power. But some of your largest PEOs have over 600,000 worksite employees. So when you start looking at these mid-sized I'd say a lot of PEOs are in the 20,000 to 70,000 worksite employees across the country. So they create tremendous buying power for health benefits and beyond. So let's jump into health benefits. When you move into a lot of businesses, if you are a small group, and I believe if you have fewer than 100 employees in California, you get age-banded rates. What that means is that everyone is paying a different rate based on their age, their gender, and their zip code. So you have small group rates. You don't have much buying power with 10, 15, 20 employees. You have more than 2 or 3 employees, but in the open market, buying power doesn't really change your pricing in the small group market. But it can be, you can have employees with premiums from, a younger employee with $400 to a more senior employee that could be $1,400. So the range of premiums for the same plan could range significantly for employees. What happens when you move to a PEO is that they have a master health insurance plan. So when I said all of the employees are under their federal ID number, all of the employees that are using their health insurance through the PEO are on a master health insurance plan provided through the PEO. So these PEOs may have 20, 30, 50,000 people utilizing their health insurance. And they also have a pretty thorough underwriting process because they're very protective of their pool. They want to make sure that they have stable long-term health pricing. So upfront, they do more underwriting than, let's say, the open market would do. But once you can get into the PEO with competitive rates, it does create a nice environment to have stable and predictable health insurance for the vast majority of companies using PEOs. But it doesn't just stop. And also a nice benefit is that you can have everyone pays the same rate. So you have large group rates. So everyone pays the same rate, no matter their age, gender, or zip. And what's really nice is that as you start to see more companies go multi-state, you can now have health insurance plans across the country, all with the same rate for different employees. So that's a really nice benefit. But again, you can tap into the Fortune 500 benefits of medical, dental, vision, life, long-term disability. I've seen some pretty powerful numbers coming back from life insurance, long-term disability, and whatnot. So the next biggest area, and workers' comp and health benefits can both bring significant savings. I've seen very significant savings with both of these areas. It doesn't happen all the time, but there's usually some type of savings. But depending on the situation, I've seen meaningful savings. Workers' comp, same thing with workers' comp. Now, PEOs actually function a little bit differently on the workers' comp side. PEOs have a master workers' comp health insurance plan, and usually they're self-insured up to the first, let's say, $1 million of every claim. So PEOs are getting lower rates because they're self-insured and they're taking more risk as well. But what they're willing to do is they're willing to see kind of beyond the very more generic underwriting that the open market does, and they're able to really identify how the PEO or how the client can perform in the future while under the umbrella of the PEO. So often the PEO will get very aggressive with providing very competitive workers' comp claims or workers' comp premiums. And this specifically, I'll get into this a little bit later if I get to the slide, but if you have a high experience modifier, right, PEOs see beyond your experience modifier. There's every company out there that has a high experience modifier. There could be fraud. It could be a shock loss. There's a lot of reasons. And what I do with every PEO submission that has a high experience modifier is we're really digging into this and creating a business case as to why performance will be different in the future and why this historical performance won't repeat itself or is more unlikely to. And that's where the PEOs can say, okay, great, you have a 140 experience modifier. We're going to price you at a 90 experience modifier because that's where we think you're going to perform. So for those companies that have pain points around workers' comp, a PEO can be a great option to consider. Another area, and we're seeing a rise in more HR-related lawsuits and whatnot, and a lot of companies that come to me, they do not have EPLI insurance policy in place. EPLI, a true risk management strategy, is pairing insurance with a proactive strategy, right? So, so with a PEO, when you move into a PEO, you automatically get an EPLI insurance policy. Now, I will tell you, these EPLI policies have high deductibles. Okay, some have $20,000, $25,000, some have $100,000. Let's just say every deductible is below the average cost of a lawsuit. So these policies do have, they can provide a lot of value because they can cover a lawsuit from that $125,000 or that $25,000 deductible all the way up to $1 million. But on the open market, you can get lower deductible EPLI plans as well. But what's great is when you move into the PEO, the EPLI is usually included because, again, the PEO wants to protect themselves by making sure all their clients have an EPLI and at least a safety net for a non-catastrophic lawsuit, even though a $100,000 lawsuit could be catastrophic for many companies. Another area where we look to see the aggregation model really impact is on the 401k side. These PEOs are aggregating 401k funds. They have one 401k that they can move all their PEO clients onto. So you have lower expense ratios using a 401k, and also most of your administration fees are eliminated when you're using them. And then, beyond that, you can access like a range of ancillary products with lower costs. For instance, staffing, right? If you need help with recruiting, for PEOs provide very low cost aggregated pricing for certain types of services because all their clients are using it. So again, where I see the PEO can create tremendous buying power, or help create savings for companies by accessing their buying power. So we've gone through the health benefits. I don't want to spend too much time on this, but if you're an established business, we can compare your existing insurance with the PEO's premiums. If you're a new business, sometimes it's really difficult to get insurance, especially small businesses. So PEOs are very active with working with new businesses. And then, of course, multi-state employers. You can have one insurance plan across the country with very predictable rates, and streamline everything with health benefits. I want to talk a little bit about the PEO being used as a single source solution. So we spent a fair amount of time talking about the aggregation model of the PEO. And really, any solution that can create more financial bandwidth is going to allow you to put that money in a place where it can grow, as to it just being a expense. But what I wanted to show here is the entire flow of how the PEO technology all works together. Right? I'm going to take you on a little journey here from onboarding to employee separation. So when you're using a PEO, and also from, again, companies that are multi-state, this is even more complex. But when you are using a PEO, first of all, your onboarding is automated, right? So all of your employees will be enrolling online. Again, there are options to do everything paper, but the future of the PEO technology and where we are today is most companies are enrolling electronically on a computer, on an app. So the employees on board, during that process, they complete their I-9, and you cannot get through onboarding unless you complete your I-9 and the required documents. So part of the nice thing is on the PEO, you can't get too far with missing critical steps. The employee can't get to beyond the I-9 form if they do not complete the I-9 form. So, so that's a good thing to know is when you onboard someone with a PEO, you can feel comfortable that they've completed their W-4, their I-9 form, that their handbook, your company handbook and notifications have been deployed. If CalWorks creates an employee manual for your company, you can upload that to the PEO and you can upload all of your documents. We're not just talking, the standard federal and state required documents. Whatever documents you want as part of your onboarding, you put that into the system and we can now automate all those documents as well. But again, I-9 completion, deployment of handbook to make sure employees are signing off on that. We see a lot of companies create employee manuals, but if the employees don't acknowledge it, that's going to be a challenge. And then what happens is that when payroll feeds into everything, so your employees are going to have an app to see all of their employment information. They're going to be able to see their handbook. They're going to be able to see their payroll. When you process payroll, all of that information will go to benefits. The benefits will integrate. If you have a time and attendance, that can integrate with payroll. PEOs have time and attendance systems. You can create, if employees have PTO requests, vacation requests, you can create calendars and organizational work charts to create a efficient flow for all of this. So, you process your payroll, your benefits are integrated, your 401k is paid. You can start to track all of your training, everything in your human resource information system, HRIS technology. And then, when that time comes where there's an employee separation, you terminate that employee in the system, and automatically that creates a domino effect of all the required documents that have to complete it to finalize employee separation, including COBRA administration. So especially if I have clients that are multi-state or employees, now everyone's working virtually. So doing things in a paper process is a lot of time consuming. So this is a way to automate your entire onboarding, the life cycle of your employees. I want to jump into this because I see this happening. This is happening a lot more, right? This is one result from COVID is everyone moving all across the country. I know I've touched on this, but I really want to let everyone here know, if you have employees in multiple states and you're having challenges managing benefits or getting competitive benefits, PEO can be a great, I have clients that have employees in over 30 states. So it can be extremely complicated, but when you're using a PEO, the PEO handles all of that and standardizes pretty much every state for you. So not every state is a new learning curve. The HR technology is really what brings this all together to automate your onboarding, automate tracking of labor law, making sure that you're doing certain things, automating your payroll, and then automating company policies, putting them into a portal so employees can acknowledge them and view them when they want, and benefits. Again, we talked about EPLI for a little bit. With EPLI, you have employees in multiple states. Having a nationwide EPLI plan is valuable. And then workers' comp. Usually, a lot of the multi-state companies I see, you're going to be more clerical, outside sales, and whatnot. But either way, there are requirements. There's policies that you have to have in all of these states. So when you're using a PEO, you have their nationwide workers' comp policy. So if you need to move to Arizona and Florida and Alaska next month, you have a workers' comp policy, you have benefits, you have EPLI, you have everything ready to go. In fact, the PEO will even apply for your tax ID numbers in those different states. Some pretty staggering facts. I'm biased, of course. I like PEOs, but I've seen the impact. Sometimes it's a little difficult to quantify because some of these impacts come from soft dollar impacts, but really, I really like to focus on the hard dollar impacts. So there is a PEO association. It's called NAPEO. Some people call it NAPEO, but NAPEO, and it's based out of Florida. And vast majority of PEOs are members of NAPEO. They are very active. It's a very, they also lobby quite a bit to simplify the small business world. So they are very active in advocating for small businesses and medium businesses because that's who they work with and that's who they care about. And they want all of these small businesses and medium businesses to grow because they have a vested interest in it. But some pretty cool facts here. So there are a number of white papers. If you ever really want to take a deep dive into PEOs, the last 7 years or so, every year the PEO industry, NAPEO, releases a new white paper with a different theme. So this is all information taken from those white papers. And if you just Google NAPEO white paper, you can really take a deep dive into these. These white papers are more 5-7 pages with some graphics. So it's not a deep dive, but it's good info. But when companies go to a PEO, really the statistics show for every $1,000 they're spending on a PEO, they're getting $1,272 back. So when I meet with a lot of companies, they're running in a million different directions. And one thing that they're not really assessing for and accounting for is their time. The time is the most valuable commodity that we have out there. I know the money is really important, but creating more bandwidth with your time, with your employees' time, create more time to innovate. It creates more time to engage with your clients, and it creates more time to focus on what you got into business to do. A lot of businesses, when you have employees, the employees is what gets you to where you need to go. but you didn't get into employees because you woke up one day and said, I want to manage the dynamics of 45 employees in 12 states. That's a byproduct of being successful. So PEO users are 50% less likely to go out of business. When COVID hit, like all of us, I was really nervous, right? I have a lot of PEO clients. I'm highly concentrated in the PEO industry. So I was like, what's going to happen? And it was amazing to see what happened when when COVID hit, when we're talking about employee assistance or tax credits, the PPP loans, all of that. The PEOs mobilize their workforce to figure out how can we take all of these tax benefits and infuse them into our companies. So a few days after PPP, everything was launched, I started seeing webinars, everything going up, because the PEO knows that cash flow is one of the biggest challenges of small businesses, and they mobilize their team to make sure to get their clients at the front of the line when it came to PPP loans and whatnot. So these are reasons why I'm looking back, this 50% less likely to go out of business, I can attest to that my clients using PEOs were able to get through that really turbulent time of COVID and thrive coming out of it too. Employee turnover is less when you're using a PEO too, because often you're providing a good benefits policy or good benefits, but also employees like transparent policies. They like to know, here are the rules and the parameters, and this is kind of how things work. So PEOs create transparency when you provide access to your employee manual to various policies. In terms of increased revenues, when companies go to a PEO, they usually experience an increase of revenue. Because all these different dynamics are working together to create a really succinct, harmonious experience. Increase of revenue, and then also profitability increases. Because again, when you're saving money on health benefits, when you're saving money on workers' comp, when you're not paying for a separate 401k fee, PEOs provide bottom line savings. And then when it comes to raising capital, quite frankly, companies that are using PEOs feel that they have a very good foundation to launch into the future and growing. And I think the most profound stat that comes out of this is that 98% of business owners using a PEO would recommend a PEO. That resonated a lot with me. So, I think, don't get me wrong, right? If you're using a PEO, there are going to be human capital challenges. There's going to be payroll challenges. It's not going to erase complications and challenges, but what it's going to do, it's going to solve those problems faster. It's going to provide different solutions to address problems, but you're also going to have more people to brainstorm with to create solutions to any challenges. So really, when you're looking for the ideal PEO partner, you should probably speak to me. But either way, this is my this is kind of my, over the years, I've really designed a standardized way of evaluating PEOs. Because for me, it's not just throwing darts at a dartboard with figuring out what PEO I'm going to help my clients target. I really look at the industry expertise, right? So if you're a trucking company, the most ideal PEO for you is going to be a PEO that specializes in trucking. If you are a staffing company client, there are PEOs that specialize in staffing and get very competitive workers' comp rates and beyond. So many PEOs actually, of those 500-600 PEOs out there, a lot of them, where the innovation is happening is they're starting to verticalize their services and create industry expertise. So whereas your largest PEOs out there, your ADPs, Insperity and whatnot, they have a horizontal industry strategy. So whether you're a restaurant or you are a manufacturing or you are a hedge fund, they are going to provide their solutions to you, but they may not have deep domain expertise in your industry. So there are industries out there like trucking, home healthcare, even commercial janitorial, hedge funds that do PEOs create verticals around. So aligning with a PEO that has deeper domain in your industry is always a plus. Service models, right? Do you like single point of contact? Most people do. But sometimes there's lower cost points with PEOs with, let's say, more call center type of solutions. So there's a range of pricing tied to service models that we can really evaluate. Health insurance options, right? So all different PEOs, they have different, some PEOs have Aetna, some PEOs have Anthem, some have United Healthcare. If you're using Aetna, you may not get very competitive Aetna premiums moving to a PEO. So there's a lot of strategy around aligning the PEO health carriers with the type of insurance you're looking for. Of course, technology, bringing all this together. What I've learned from technology is, it's intuitive, but it's also very personalized. So I always like to take clients through demos to make sure that you can see the technology, and it's not just a surprise, because I want companies to really have a transparent process when looking at everything, especially the technology, because their employees are going to be seeing the technology too. One thing a lot of companies don't, what I've learned over the time is they're not accounting for stability with a PEO. When you move your employees to a PEO's federal ID number, you want that to be a stable, solvent PEO. There are PEOs, this IRS has a certified PEO program that provides tremendous protection for PEOs. So there's different tiers of PEOs that have different certifications or whatnot that represent their stability. This is something I take very seriously, and whatnot. So, and then last, location, right? I work with companies that are, most of their employees may be in a certain geographical area, and they say, listen, we really want to work with a PEO that is in our time zone, that's close by, and really understands the dynamics of our region. Other companies say, we have employees across the country, so we would prefer to have a PEO that has a nationwide footprint. So these are all areas that we really go through to determine, it's just, and how most companies find a PEO, they go onto Google. And if you go onto Google and put PEO, the only PEOs that are going to come up are the PEOs that are paying the most to bring you to them. The companies that can pay the most to bring you to them are often your public companies, your public PEOs, that are not going to really, the large PEOs out there, they can provide a good service. They can provide some powerful aggregation model, but I can tell you that I often like to look outside of the largest PEOs, or at least bring the large PEOs in with other PEOs, because what I see is that some of your more middle-sized PEOs, not the largest, they provide a better service, a more engaging service. And the clients have a better experience because you don't feel like a number, and it's clear that the clients are the priority and not the shareholders. So won't dig into that anymore, but just to let you know, don't use Google to randomly select your PEO. Here's a bunch of questions that can help spark some interest around whether or not a PEO can help. Because a PEO doesn't necessarily, there's some companies that a PEO doesn't make sense for, right? So, and we can determine that through an evaluation. But, if there, a lot of companies think that, you need to go to a PEO to access this, and that may not be the case. So for instance, a single source solution, will your life be easier if everything functions together If that's a yes, then maybe a PEO could help. In terms of HR, right, like the technology, if you can bring all of this together to essentially identify gaps and have more transparency around your HR technology training and all of that, is that going to help? Payroll, integrating payroll with employee portals, is that going to create a better experience for your employees where they're going to have a more transparent experience? Workers' comp, what I really see is when companies move to a PEO, workers' comp can create some substantial savings, and you can take that savings, and sometimes that can actually subsidize the cost to use a PEO. I've had situations before where a company moves to a PEO and they save enough money on their workers' comp and health benefits to where they're actually saving money by moving to the PEO. And we're talking tens of thousands of dollars, depending on the size of the company. But I've literally seen essentially PEOs pay you to come on board to them because they have such a powerful aggregation model. EPLI, we've talked about that in future plans, right? So PEOs, one area that PEOs can really help with is scaling. So if you're going to be going from 10 employees to 40 employees or 10 to 20, that's a huge jump. So a PEO can help take, I've had companies that have used a PEO that have gone from 1 employee to over 400 employees in 18 months, go to 20 different states. So it's PEOs, if you need help in that, essentially the scaffolding to help you grow, PEOs can act as that scaffolding. Just to give you a little overview, a little plug for, again, what I do in my process. I have a very soft approach when I work with my clients. I'm not pushy in any way. And, really, I just want to create a nice, because I'm a business owner myself, so I empathize with a lot of people, with everyone I'm working with. So just to give you, and I won't go through this in too much, but we take a deep dive into really where your challenges are and what your ideal solution looks like, and what the future looks like. Then I usually source 3 to 5 different PEO options, and we compare the financials, the services, the tangibles, and the intangibles. We compare all of that. And often I go through this like, if I had to select the PEO, what one from my business would I go through? And one other area, I'm not here to tell companies what PEO to use. I'm here to help my clients make an informed decision about what PEO partner they think could be good. So I'm here to tell you the good, the bad, and the ugly with every option that we look at, because I have a vested interest in making sure that you're a client for the long term, obviously. So we source and compare usually 3 to 5 PEOs, and those are not redundant options. I like bringing options, right? Different service models, different health carriers, all of that, different price points even. And then we guide you through that 360-degree framework. We empower you to make a transparent decision. I'll never know your business as well as you do, but the PEO can not only help financially, but they can have an impact on your culture in a really positive way. So those are things that you as the business owner or the HR representative, CFO in the company, these are all areas that I try to help with. And then once you're on board, I'm here to help optimize your experience. For whatever reason, if you're having a great experience and you want to make it better, I'm here to help. If you're having a challenging experience, then I'm here to help too. The PEOs, the technology functions, great, but the PEO also relies on people. And sometimes people have a bad day, right? You can have a great company, but run into a situation where there's a person that's not getting back to you. That's where I can step in and really help. So I want to make sure you're having a really pleasant experience, but if you're not, we can pivot out of that PEO and look for other options. So that is pretty much it. I took everyone through a whirlwind of PEOs today. I hope not everyone is too dizzy, but Again, I'm happy to be available for any future questions, anything whatsoever, but happy to answer any questions.